Hello, this is Josh Belk with the Belk on Business podcast. In today's episode, we're going to pick up where we left off last week. We started last week talking a little bit about conversations that you should have with your accountant. And I've kind of identified, maybe about 15 different areas in regards to areas of conversation as it relates to with your accountant. And for some people, their accountant is somebody they just try to reach out to once a year, and many times it just doesn't work that way, especially if you're a business owner. For individual tax preparation, in those types of scenarios, it may not be as big of a deal. But if you're a business owner, who pretty much is who this podcast is really geared toward, you're going to want to have regular conversations with your clients, with your accountant. And as an accountant, the more we find that the more educated our client is, the more dialogue that we have, generally we will see their business strive in certain areas, and they will find success in a way that they have not experienced before. But it really is going to boil down to having the right types of conversations. Now, last week we talked a little bit as far as some areas, and I think they should have been rather obvious, I would think, in regards to areas that you should be talking to your accountant about. And of course, we talked about P&Ls, we talked about trending and variances, the future of the business, and taxes last week. In today's episode, I'm going to talk about 5 new areas or different areas as it relates to those conversations you should be having. First is that of cash flow. When it comes to a business, the oxygen of a business will get sucked out of it for one of two reasons mainly. First is that of fear, and that's really comes down to the mindset of the owner. So if the owner does not have the proper mindset and they're governed by fear, they're not going to find themselves in a position of succeeding. Second is that of debt, and debt really boils down to cash flow issues. And so it will create cash flow issues in a business. And so debt, if it's not managed, if it's not managed well, if it's not used well, and I think ultimately it's something that should be avoided as much as possible. And I don't necessarily always buy into this good debt versus bad debt, that type of thing. And I can get into examples why, but I did record podcasts in the past, a number of podcasts as it relates specifically to cash flow. But when it comes to cash flow, it really should be one of those main areas that you're regularly having dialogue with your accountant. How is your current business cash flow? Understanding your burn rate, understanding what cash flow is needed for maintenance and expansion. And really boiling down to that understanding of cash is what is needed for that business to ultimately to survive. And so if the business does not have cash, it is not going to have what it needs to be able to survive. Forget getting to the point of being able to properly maintain the business, to be able to expand the business, and do the things the business owner needs to do and wants to do to be able to properly run the business and be able to push that business forward. And this, on its own, is a massive topic. One I'm actually working on writing a book on specifically. But and like I said, we recorded podcasts. There's a number of pieces of information podcast out there on this topic of cash flow, but you really need to understand your cash flow, have that conversation with your accountant so you understand it as it applies directly to your business. Next is taking a look at your contracts. And this covers a lot of areas: the contracts with your vendors, contracts with your bankers, with your loans, and a lot of this boils down to back to the cash flow issue. So when it comes to your budgeting, when it comes to the plans that you have in your businesses, is there language in your contracts that's going to create problems for you? Understanding when is a loan going to balloon? If you prepay a contract, a lease contract that you have, what sort of problems, what sort of disruptions may that cause in your business? Many times business owners go in, they sign contracts and just kind of thinking that, this thing will automatically just renew in a few years. Or, the vendor will understand if they have to cancel this thing, or if a bank will understand if I want to quit claim this deed, this property into another entity. But really taking a look at those contracts and finding out what sort of problems may be created due to the language in those contracts. Many times And we do this quite frequently, whether we're preparing tax returns, whether we're preparing financial statements, or we're just doing some practical business planning. We will ask for those contracts because we want to be able to provide as much direction to the client as we can. So that they understand that, what you probably need to be having this conversation with the next few months with this vendor, with this bank. Keep those lines of communication open, because if you don't, this is a potential disruption that you may experience in your business. Next is negotiation and opportunities. Now, I'm not talking about negotiations with the accountant. I'm talking about negotiation as it relates to your banks, with your vendors, with others out there. Are there opportunities for better terms? Are there opportunities as it relates to potential tax credits? In this past year, there's been a number of different different opportunities that are available out there for your business. Does your business is your business eligible for some of these credits? But having those conversations, so they're looking at the contracts, they're understanding the what's going on in your business, and that's why it's important to have these conversations frequently. I would say at least quarterly that you're having these conversations with your accountant. They can make you aware of some of the things that are going on as it applies directly to your business, whether it's tax, understanding of your contracts that you have with your vendors, contracts that they have as it relates to your bank. When is the right time to have these conversations? That way you're not missing any potential opportunities to save your business some money or to take advantage of some tax opportunities, loan opportunities that are out there. Number 4 for today are staffing concerns. Do you have key employees that may be leaving? Are you looking to onboard employees? Making sure that your budgets are functional in a way that when you have these changes in your business, that it's working. Taking a look at your numbers to say, okay, well, maybe you're understaffed in some areas, maybe you're overstaffed in some areas. Are there issues going on in the business as it relates to employees? Are there possible disruptions as it relates to key employees leaving, or maybe your integrator in your business is pursuing another opportunity? You're trying to onboard somebody to help manage a piece of your business, and making sure that you're having those conversations with your accountant as well. And then lastly for today is that of capital improvements, fixed assets, and property needs. And so a real good understanding, and kind of boiling this down a little bit to what is an expense versus an investment in your business. So every outlay of cash in your business, you should have an understanding, is this an expense? Is this something I'm spending with no possibility of return? Or is this truly an investment in your business? Something that if you were to go to spend the cash, that there is a return on investment. You may not be able to put a dollar figure on it necessarily, but an understanding of this cash going out the door is going to reap some benefits. Do I need to go in everything from new furniture in the office to onboarding employees to buying or leasing a new location? And so you kind of just run that entire the entire spectrum as it relates to what would I say, capital spend, especially. And when I go and I spend this money, is this something that I'm going to be able to see a return on, or is this an expense? Is there a better opportunity? Is there a better way to go about spending this money to get the same type of result, or maybe even a better result? So conversations with your accountant for today: 5 different areas. First, cash flow. Second, contracts. Third, that of negotiation or opportunities that are out there. Fourth is staffing. And then fifth, that of capital improvements, fixed asset, and personal property needs that you may need inside the business. Hope this podcast brought you some value. This is Josh Belk with the Belk on Business podcast. If you haven't already, I would ask and encourage you to subscribe to the podcast. Have a wonderful day.